To pick the best stocks at the right time, there are three key things to consider: the overall market condition, the company's strong fundamentals, and the chart pattern indicating a breakout. Examples of breakout stocks can be found in every market cycle. Lotus Lab is one example of a stock that broke out of a cup pattern in 2020, which led to a 216% increase in just 18 weeks. Even if an investor missed that initial breakout, Lotus Lab formed multiple bases that presented several opportunities to buy shares. In 2020, appliances manufacturing company Dixon Technologies broke out of a consolidation base with heavy volume indicating strong demand among large money managers. The stock rose over 90% before a sharp pullback, but it formed multiple bases and climbed more than 1000%. CDSL climbed past a 276 buy point from a cup with handle in June 2020, which led to a more than 500% increase in just a year and a half. The stock consistently found support along the 10-week moving average, which is a sign of large investor support and continued buying. To minimize risk and maximize returns, investors should wait for all three pieces to fall into place before buying. This means waiting for a breakout from a chart pattern, such as a cup with handle, double bottom, or flat base, while ensuring the overall market conditions are favorable and the company has strong fundamentals.